In December of 2017, which seems like eons ago, I got approached in the kitchenette area of a big financial firm by one of the secretaries, who I knew by name. She was a very nice middle-aged lady. And she told me she just purchased her first Bitcoin. Now, I knew she had no experience. She never owned any stocks, no crypto. But in December of 2017, she decided she wants to be a Bitcoin owner. Now, I left that conversation pretty much convinced that this is the high, this is the top, this is the ceiling. Because if you know that famous story about the Shushan boy who starts giving you portfolio advice, it kind of felt like that. You remember the old Warren Buffett saying, when everybody's bullish, I'm bearish. When everybody's bearish, I'm bullish. So I walked out of that kitchenette area and I thought to myself, well, dang, if I had any Bitcoin, that would be a good time to sell. Because if she's buying it, and I don't mean her personally, the profile that buys that, it's probably not a good time to be in it. And I forgot about it. And then in April, I took a look at Bitcoin prices. They were like 7, half. Looked at it again in December of 2018, just a year later, it was 3. All the way down from 15. Now, a lot of people lost their pants on this. And a lot of people panicked. A lot of people sold. But the people who were long-term into Bitcoin actually wrote it out and are now sitting at $50,000. So they didn't get hurt. The ones who got hurt were the inexperienced sheep that was led to the slaughter by the professionals. Now, I don't want you to be in that situation. That is why I'm making this video. Because right now, I see a lot of euphoria in this market. And that's fine. But that's exactly why I want to make today's video, because I think today's video is going to save a lot of people by providing them a plan on how to invest smart during all-time highs without losing your pants. Now, I get the arguments. We're looking at this market and we're saying, look, right now, the economy is great. Unemployment is very low. Gross domestic product is growing way faster than anybody thought. Inflation is kind of under control at about 3%. And we have about 70% of companies just beat earnings in Q4. Not bad. Now, on top of it, you can make an argument that we're just recovering from what happened in 2021. Back in 2021, December of 2021, the S&P 500 was 4,800. We're currently at 5,000. So it took us a whole 2 years to get back to exactly where we were in December of 2021. So there's a lot of arguments that are saying, well, look, Tom, this market isn't really euphoric. We just came back a little bit and the macroeconomic data is strong. The earnings are fine. Why would it pull back? Well, it might not. It might. I don't know, which is exactly why you need to prepare. And I want to explain to you, a market like this is exactly how people get screwed. This is the FOMO problem, and I'll explain. People join our Discord all the time. We have 6,300 members on the Discord. A week ago, we had 4,000. We have 2,300 people who just joined our Discord, which is free, by the way. You're welcome to join. I'm going to put the link on the screen for you guys. So we have 2,300 who joined our Discord. I'm looking at all these conversations right now in our public chat, and a lot of people are getting excited. They're looking at all these guys in our Discord and our Patreon group who've made a lot of money. CrowdStrike, a stock we've been covering all through 2023, is up 200%. Obviously, Palantir is up 250%. SMCI is up, like 800% even after the pullback. ANET, Ariston Network is up, 100%, and so forth and so forth. 8 out of the 9 stocks we talked about in 2023 are up, and are up on average 80% per stock. So there's a lot of kind of fear of missing out. A lot of these people who join our Discord, and I can see it in the conversation, they want part of it. They want a piece of the pie. And they fear that if they don't invest now, and if they don't pull the trigger right now and put all their money quickly before the market runs away, they're going to miss out. And that's a huge mistake. Because the first thing I can tell you from experience of being over a decade in this industry is that when sentiment becomes like that, when people are trying to chase the market, it's usually a sign that a pullback is around the corner. This euphoria is very, very dangerous. And this fear of missing out that's fueling these mistakes is where you kind of start identifying problematic behavior. Now, I'm not saying a correction is coming tomorrow. I'm not even saying that it is coming this year. Maybe not. But it's part of the normal course of business of a market to correct. And these corrections can send people in really, really bad places. Now, I'll explain what I mean. You see, the main index on the stock market, the S&P 500, pulls back by 5%, 3 times a year on average. That's just stats. And at least one time a year, it pulls back by 10%. Now, you may say 5% and 10% is not a lot, but remember, when you invest in stocks like Palantir, that has almost a 3 beta, that means that whatever the index does, the stock does 3 times. So if the market pulls back 10% once per year, Palantir is going to come down 30%. And if the market pulls 5% down 3 times a year, that means that Palantir is going to pull down 15% 3 times a year. It's a very volatile and hectic environment, which is part of the course of business of any stock market. Even if the stock market is having a good year, even if we're having a great year, there's never a pattern where the line just goes up in a 45-degree angle. It doesn't happen. It always goes up, goes down, goes up, goes down, goes up, goes down, and eventually you can figure out the trend. But you're never going to have a stock market that will go linearly, completely up without any pullbacks. That's never going to happen. Now, why am I making this video? Because a lot of you may get scared hearing what I'm saying here and freak out, and I don't want that to happen. I'm not trying to sell you fear porn. I'm not trying to get clicks off of this. I don't want none of this. I want you to understand that we don't know when market corrections happen. Now, there's a lot right now that's going on in this stock market that shows me that there's a good chance that a pullback is around the corner. Now, we have to prepare for the option that it may do so even if we don't know when. I would even make the argument that we have to prepare for the option the market will pull back, especially because we don't know when. Because you can't time it, you have to start preparing now before it happens. Because once the pullback is here, it's just too late. Okay, so in that case, how do you prepare? Well, good thing you're here because right now we're going to talk about the strategy of how to prepare your portfolio in order for you to still make money in this market without taking a huge amount of risk, and also share with you 7 stocks which I think are good additions to any portfolio in this specific time frame. Now, obviously, you can deploy one strategy, which I've seen people do, which is just to try and sell your portfolio, go cash heavy, 70%, 80% cash, and wait for the pullback. Some people will do it. I don't recommend it. I think it's a huge mistake because I think it's impossible to time the market on a consistent basis. It's impossible to develop a methodology that would allow you to time the top and the bottom every single time because you have to guess when the top, when you get out, when you get back in. I don't think it's possible to do it on a consistent basis. So that's why we buy stocks for long term. We hold stocks for 5, for 10 years. And my advice to you is just to stay invested at all times, good times, bad times. Staying invested over the long haul in the stock market is a way better strategy than being active. In fact, Fidelity actually proved this by doing a research and showing that people who have died and their portfolios have become inactive in a state, those people beat all the active traders on a consistent basis every single year. Now, what you can do instead of selling out and going outside the market and waiting and hoping for the best is actually deploy a dollar cost average approach. You always stay invested and you buy the stocks you like on a consistent basis. Now, if a market does not pull back, if we stay in euphoric times, then you just keep buying. Now, if the market pulls back and you have a bunch of discounts on stocks you love, then you get to dollar cost average at a quicker pace. This is the double down DCA dollar cost average strategy we teach on our Patreon. Patreon.com/Tom Nash. That's our academy. More than welcome to join. And basically, the main conclusion out of this whole strategy should be to learn to ignore your unrealized profits and losses. In the same way, you don't look at your portfolio right now and you celebrate these unrealized gains. For example, I have massive gains in portfolio because of Palantir. I'm not celebrating it because it's not yet time to sell. It's an empty number on the screen. In the same manner, if the market pulls back and you're currently actively dollar cost averaging into these stocks you like at a discount, don't be looking at your portfolio and saying, oh my God, I'm down by so much. It's a virtual number on the screen. And most importantly, you have to develop a strategy of how to get cash on the sideline without selling the stocks you love. Because if bad times come and you'll need to dollar cost average more into a stock because now it's cheaper, you'd need some cash on the sidelines. So that's important to have that cash on hand ready without liquidating the good stocks you're already in. Now, that can come through financial planning, through improving your cost structure, budgeting, all these stuff that are on your personal finance level. They have nothing to do with the stock market. But that money has to be ready in case this happens. And if not, You just dollar cost average. And beyond the general strategy, which is quite important, I do want to say a few words about stocks I like for 2024. In 2023, I made a list of 9 stocks I liked. 8 of them went up like crazy, 1 went down by 5%, but overall we did about 80% per stock. And a lot of people ask me how I've done it, and basically I did it by using my methodology and my system and tools like Stock MVP, stock-mvp.com, to analyze stocks, to build my own DCFs, to build my own modeling, and to look into the guts, into the insides of these stocks to find the gems. Now for 2024, here are the stocks I like. Number 1, NVIDIA. I love it because it's a huge exposure for the AI infrastructure. They're going to be a huge leader in the building blocks of AI. Now, there's a lot of good stocks in this region like ANET, which we talked about in 2023, and we made a lot of money on it. SMCI is a great stock, not at this price. It was great at 220 when we were talking about it, not at this current price. Number 2, Palantir, just as NVIDIA is the leader in the AI infrastructure, in the hardware, Palantir is the leader in the AI software. They will build the operating system for this whole AI revolution, just the same as NVIDIA is building the infrastructure. And they'll be dominating this industry for years to come. Now, honorable mention here is Microsoft, which is also on my list because Microsoft will be probably number 2 in the AI software side with Palantir, splitting that market. But Microsoft is also a huge player in cloud. Still, one of the biggest, best growing in the cloud sector as well, which is also going to be huge. So Microsoft has to be on your list. Tesla, obviously, because if you think about the huge potential of Tesla in humanoid AI, in robotics, that's the next big wave. And Tesla has a huge running start before anybody else, just like they had with electric vehicles. That's the next big industry. Obviously, you have to think about cybersecurity. And you know I love CrowdStrike. I've been going on and on about CrowdStrike for the past 3 years. CrowdStrike is one of the best cybersecurity plays right now. It did 200% for us in 2023. And I believe it's going to have a good 2024. And of course, TSMC, Taiwan Semiconductor, pretty much the monopoly in semiconductors. That's the infrastructure for this whole thing. If you think that NVIDIA is the infrastructure, well, if you go a little bit deeper, TSMC is it. And of course, an honorable mention, ASML out of the Netherlands, another good company to look into and to research. Thank you so much. I'll see you in the next one.